All right. Happy Friday, everybody. It is a beautiful day here in Seattle. This is one of our rare times to get sun before we usually get it. Usually it's May. You got to wait until May or June to get sun here. But if it does come early, we are super happy. So I'm having a good day. I hope you guys are too. Today is a good day because we got Randy with us. Randy Langenderfer. I had to ask how to say that earlier. Randy comes
Good
to
job.
us from Texas. He is an investor and investing coach with 1,500 doors under management. He is a fellow corporate, I don't want to say fleer, but corporate, left his corporate job to get into real estate, just like I did. So, Randy, I'm super excited to jump into this. Thanks for hopping on the show.
Well, Gabe, it's my pleasure. And I'm in Houston, Texas today too. We're having a beautiful day. It's 78 degrees, blue skies, and low humidity. So
I love it. I love it.
as soon as I get done with you, because I am self-employed now, I'm going golfing. So
That's the life. All right. I told you before we got on here, we like to start with stories. We like to hear how people got into real estate because everybody has a unique and interesting story. And so let's hear yours. How'd you get started in real estate?
well, mine, yeah, it's true. Many of them are similar, but they're all unique and different. Mine got started in the 08 and 09 Great Recession when I had a brother-in-law come to me and wanted me to help him start flipping houses. I was living in Cleveland, Ohio at the time, and he wanted me to flip houses with him in South Florida, Dade County, Miami area. And I
In
said, "You're
South
nuts."
Florida. Interesting. Okay.
Yeah. And the bottom line is we became hard money lenders. We would finance the acquisition, the rehabs, and made us a good dollar. Relocated to Houston for business because at that time, um, I was really concerned, and I made the conscious decision that I needed to find another stream of income. And that's why I got into flipping houses initially, because the corporate, I was working for a large private equity company, executive making a healthy dollar, and realized that, my ladder was leaning on the wrong wall, as they say. And I was very vulnerable. Thank goodness never got released. Came to Houston for a W-2 job. Spent in 13, spent the last 10 years as an exec for a large academic medical institution here in Houston. Just stepped away last April, so a year ago,
Congratulations.
to do real estate full time. And I had been planning that exodus for really about 10 years, since about coming to Houston, when I made that decision that I need to find another income. And the flipping world wasn't for me. I found multifamily and really have never turned back. So I started educating myself. I started investing my own dollars. Went to every meetup I could find, listened to every podcast I could hear, and just really dove in head first. Started investing. Did my first GP in 2018, and since then I've done. Like you said, I'm GP in about 1,500 doors, about $200 million under assets under management, and I don't know. I continue to invest in other people's deals. So I'm in probably another 3,000 doors elsewhere with other people. I've got the majority of my net worth in real estate in many different markets. And so, as you said, I diversify by different markets, different sponsors, different types of assets, and just recently started a coaching business that perhaps we talked about later. But anyhow, I'm long-winded this afternoon.
It's all good. That's a story. I love it. So it sounds like you had a long run up into really deciding to go full time into real estate. 10 years, you really planned it out. What was the point that kind of got you realizing now is the time to make the switch?
Well, when I could had the income to replace what I was doing on a day-to-day basis, and had income to have benefits, and I wasn't going to go to a $50,000 a year job and take a giant step backwards. So it was really just a matter of building up that passive income stream that I could live off of.
Yeah, that makes sense.
And I was fortunate to have a good enough job that like I said, I wasn't going to take a major step backwards. So
Yeah. Yep. Yeah. I mean, the making that decision, deciding when is the right point to, jump from corporate into your own, full-time job, or into entrepreneurship. It's a stressful moment. And it really comes down to, can you live on it? I jumped like way I actually wish I had jumped a little bit earlier, but when I made the leap, I basically had no money to to put together. I was a lot younger at that point. I was in my 20s, so when you're in your 20s, you can do whatever. But I
Well,
did it, and luckily I made it out. But it was a stressful period.
yeah, I had a friend a long time ago tell me when you're in your 20s and you make that dip, that leap, I should say, if you were to fail miserably, you could always go back and get a W-2 job. I'm in a different season of life, and that if I failed, well, we were going to be living underneath a bridge.
It'd be
Um,
rough.
and so that wasn't as much an option. So more
Yeah,
encouragement to your audience to decide, what, and I just coach people that you got to be able to have an income close to what you got now. Or maybe your spouse has got a great job and he or she can cover benefits for you and stuff like that. So you can make the leap much earlier than I did.
yeah.
It was
And
a simple income.
it sounds like you were really leaning on the passive side on, getting your money out there, and having that monthly cash flow coming to you. You went away from flipping. Why did you choose not to do flipping versus, or why did you choose to to do flipping or to do multifamily over flipping?
Yeah, so when I moved to Houston, I was still doing a couple flips and I got really excited about moving. I was at the time living in the Cleveland, Ohio market, working with a brother-in-law. And when I moved to Houston, I got really excited about doing flips. Fourth largest metro area in the world. I figured there's got to be a ton of opportunity here. And there was, and there still is. But really, to scale, as you know, it just became a challenge
Hmm.
to find enough properties and turn them over. It just became a real challenge, and I could cover so much more ground than 100-unit multifamily than to get 100-unit, 100 single families would be a tremendous amount of work
Yeah,
that I was still W-2 in and didn't have the time.
yeah, that makes sense. So when you turn your attention to multifamily, how did you get started in it?
Yeah, I remember vividly. I was at an educational event here in Houston. Well, Houston has several different large educational institutions. I can even mention them. Lifestyles is here in Houston. They're a big educational arm. I went to one of their events. I wasn't impressed with it. I went to the Sumrock Group in Dallas, Texas, and was in that organization for 3, maybe 4 years. Learned a tremendous amount. That's where I kind of cut my teeth. And I then just kind of went solo and started working on my own. And now I'm in the Rod Khleif's organization right now, and
Yeah,
he's
I
part
have
of his
I've had
mentorship.
Rod on the show. Yeah.
He's a great guy. He's on my webpage as kind of a mentor, not kind of, he is a mentor, and just really enjoy his friendship. But anyhow, that's kind of the educated myself, and then it was a big piece of it for me. I'm an analytical type. My background as I'm a CPA and an MBA, so I'm just very heavily analytic and wanted to reduce risk and find mitigation factors, et cetera, et cetera. And so it took me a while. I'm a slow learner, Gabe. I'm not as quick as you.
Hey, that's all good. So long as you're making progress forward, that's what matters in this game.
Well, and the other
Uh,
thing is for your listeners, it doesn't matter. It's never too late either. I started very late in life. You
mm,
started very early in life. You'll probably have a ton more money than I do, but that's okay. It's never too late to start. It's a matter of what you enjoy doing.
yeah,
And to me, that's what retirement is and entrepreneurship is. I said, I still work a lot of hours, but I do it for myself. I don't do it for somebody else. And I don't have to fill out a bunch of dumb reports every week and send them up to somebody.
I know. I have like my team fill out reports that I can read, and whenever I do, I think back to when I was in corporate and I hated making those reports, and I'm like, oh man, I'm sorry guys, but I do need to know this information.
Have
Uh,
mercy on them this week.
yep. All right. So multifamily, that's your bread and butter. That's what you love to do. It's a difficult asset, well, I mean, I guess all assets are difficult to get into, but multifamily is especially competitive because that is where a lot of people focus their attention on is multifamily. If you were to talk to somebody who was just getting into real estate, they're thinking about multifamily as the asset they want to focus on. What are the first, let's just say, three pieces of advice that you'd get them to find a deal, finance a deal, and then get it under management?
Great question, because it is difficult. I think each year as the big educational boxes throw out more and more students too and get them hooked in. But I think it's still very possible. I'm encouraged. I think the advice to somebody just starting out, or even to my younger self, will be first and foremost is to educate yourself. Um, be it a boutique or a large or a big box, what I would call them, educational arm. I'm always amazed people spend thousands, tens of thousands, hundreds of thousands on their college education or their
Mm.
community college educations, but they don't want to spend a dime on multifamily or real estate.
College tuition, and this is a complete aside, but it is insane how expensive it is now. I like even I went to University of Washington, and when I went there, I paid $10,000 a year. But now it's like I think it was like 40 or 50, something crazy. And
Oh,
that's a
wow.
public institution. You're talking private's like 100,000 plus. It's nuts. Anyways, I jumped into your story. Keep going.
No,
You
it's
said
it's but
first one
it's
is
very
education.
it's very true. It's and it continues to escalate, and so uh, educate yourself. Find mentors, coaches in that educational arm that you can work with, learn from, study. It's going to help you reduce mistakes. It's going to propel you to do it sooner. You may be able to do it by yourself, but you're not going to do it as fast. I'd say education, networking, which I don't know, maybe that's a part of it, but you gotta listen to other people that have gone before you. Somebody told me once, Randy, just follow the playbook. Um, People have done it before. You don't need to deviate. Just do what they've done.
Yeah.
And there's a lot of truth to that, but you need to know what that playbook is. And so, networking at conferences, meetups,
I feel
webinars, online. Yes,
I
it's
feel
time consuming.
especially for my path, talking with people has been so much more. I've taken courses, I've taken all that stuff. When I was just getting started, I took everything you can imagine. I went out to,
Yep.
yeah, if you name it, I took it. But the thing that I gained the most information from was just talking with people,
Yeah.
and like hearing somebody who was doing flips or who had bought multifamily, and asking the questions. And I feel like that is especially the most important thing because they're going to give you answers that are relevant to where you are, versus education. I feel like is generally if you're going to a course or you're going to watching a YouTube video, they're more general and they're not specific to what you need to know at that time. Again, I jumped into your spot, but I thought that was pretty
No,
relevant.
no, it's very relevant. And it's somebody said to me once, you're never going to find a deal sitting in your office. Yeah, you may find it on, I mean, email, but you're never going to close the deal sitting in your office, right? And you need to go out and meet brokers and like-minded investors. At those networking events, you may meet a future partner. I know I did when I first started. A future partner that you can get started with to propel your growth. So, education, networking, and then the third one I would just say is get started. That comes from the guy who is super analytical and goes, the old ready, aim, fire. I would go ready, aim, 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 aim before I fired. So you have to get started. And, there's a lot of people I know in this that are analytical as well, IT and engineering types, et cetera. You got to pull that trigger at some point,
Yeah.
but educate yourself. You'll reduce the risk.
Yeah, I think especially in real estate because it is a very analytical. You're doing due diligence, you're running numbers, you got to be analytical. But it is so easy to get caught in that and just get caught in the I need to prove that this deal is going to make me money through numbers versus just getting doing your underwriting, getting it closed, and getting forward movement. Um, yeah, that's good advice. So networking, education, and then just pull the trigger. Just get out there, get a deal done. I think those are three very important pieces of advice for anybody getting started out there.
You could summarize that third one in just action, getting
Yeah.
started or action. yeah, it's just as my mentor Rod Khleif would just take massive action. It's kind of his mantra.
When you got started, when you found your first multifamily, did you find it on market or were you doing off market, like hired a VA team to do cold
No, it was
calls,
through
that kind of stuff?
brokers. It was through
Brokers.
brokers. An interesting story as a broker that was in Beaumont, Texas. I'm in Houston, and the broker was in San Antonio in the opposite direction for those who geographically know Texas. And the guy was just incompetent. It took us a year to close the deal, but that was good because nobody else was looking at it, and it turned out to be a gem for us. So,
Yep. Yeah, it's funny. You never really know where a deal is going to come through. Well, I've only bought
persistence.
one deal on market, but it was listed incorrectly, not as a self storage facility. And so I kind of got it for when nobody else knew it was out there on market because the broker hadn't listed it right. He listed it as like, I can't remember, like multifamily or retail or something like that.
Man, where's the seller on that one? You got to think the seller should just be furious. But anyhow,
Yeah. Yeah, but yep, you never know where those gems are. All right, that rounds out the first section. It is now time to jump into the quick question round. Are you ready?
I'm ready.
Let's do it. It
As long
starts
as you
with
don't answer any tough ones.
it
Ask me tough.
starts with education, just like we were talking about. You could give me any recommendations. I need two of them, one for general life wisdom, one for real estate. It could be books, it could be movies, it could be whatever. Just give me two recommendations.
Two recommendations. Two recommendations. Buy low and sell high. uh, I think two recommendations would be just get started. I think educating yourself. I love the book because I'm the analytical type over here. I just pulled it out because everybody always asks me. The Hands-Off Investor by Brian Burke.
Okay,
Um,
that's a good one.
it's a great book for your listening audience because
Hands
that
off
covers all
investor.
aspects of investing in multifamily,
Okay.
from syndication to buying it in the numbers game. And yes, you have to be analytical. Um, I think the other one maybe that's misunderstood or maybe not thought of too much, but for me, I think it's really important for people to make sure their spouse is on board.
Mm,
Uh,
yeah.
a little recommendation because if you're gung ho and your spouse isn't, I've been very blessed by a spouse that has literally zero interest in real estate, but she supports me in everything I do, and
Yeah.
says, she tells me that, no disrespect, she says, "Go hang out with all your loser friends, Randy."
You got it, girl. I'll be right back.
Okay. But so I think making sure you have the support of your spouse, especially when you start the checkbook, it affects them as well. And so those would be two recommendations.
Yeah. All right. Next question is about the US. It is a big place. There is a lot of opportunity out there. Give me the single metro that you're most excited about investing in today.
Can I state, Houston and Dallas.
There you
And
go.
I would say state of Texas, but Houston and Dallas. A lot of people like Dallas and Houston. You can call them 1-2, 2-1, but you just coming from the north, it's just unbelievable. I've been down here 10 years now, the growth and the expansion, and there's no end in sight. And
Yeah.
it's
Yeah. The,
crazy.
the Texas Triangle is just blowing up. What's the other one? San Antonio. There we go.
San
San
Antonio,
Antonio, Dallas,
Austin. There's
Houston,
really four of
Austin.
them.
Yeah.
The San Antonio, Austin, Dallas, Houston, and depending on who you are, you got three of those you like, and one of them you may not like. But they're
There you
all
go.
they're all different reasons for why you should like them.
Yep. All right, next question is about finding deals. It all starts with getting in contact with the seller and writing up that purchase agreement. So, what is your favorite way to find good deals?
I don't know. I'd say I'm a proponent of maybe a shotgun approach versus a rifle, or maybe I use two rifles. But the rifles I use are one, brokers in the Houston market. I spend a lot. I talk to, and then other syndicators.
Mm,
Need help with deals, and so I've had success in the last couple of years of people coming to me and say, "Hey, will you join the team?" I didn't find the deal, but then I joined the asset management team and KP or earnest money or whatever it takes. So
yeah.
don't overlook that. That goes back to networking.
Yeah, I was
And
going to say both of those are networking. So, we're going to say networking is your favorite way to find good deals.
there you go. You summarized it well.
All right, next question. This is you've already mentioned mentors. It's super important to your career growth. Um, so who is a mentor who has contributed significantly to your career today?
Yeah, I would put Rod Khalif high on that list. Partners that I've had, I won't name them because they show you what you don't want to do anymore.
There you go.
Rod's favorite one is partners are like a marriage. They're easy to get into, but expensive and painful to get out of.
Yep.
And it's very true. So I've learned kind of partners I don't want and kind of partners I do want. And you only learn that by doing it once or twice,
Yeah.
and what to look for. So that would be a lesson learned, I would say too. And the mentorship is all and just invaluable. I am a product today with 1,500 doors of nothing I did creatively. I just learned and copied the playbook.
Learn from those who went before. Absolutely.
I
Um,
did nothing creative.
on that note, the biggest lessons learned are generally from things that go a little bit sideways, that don't go the way that we expect it. So give me a deal that went slightly sideways, and then give me the biggest lesson you pulled from that deal.
Yeah, that one's top of mind. The first deal I did, I said, was in Beaumont, Texas as a GP. It was 139 doors. It was a chiller boiler, flat roof assist house apartments, chiller boiler, flat roof built in 1965. And I remember talking to a person at the time. They said, Randy, don't do it. And because the chiller boiler will kill you. But being the ambitious guy I was, I partnered with three guys. We went out and bought that 139 unit 1965 build. 2 months in, we had a fire, took out 28 of the 139 units, ended up
Oof.
having to fire property management. I effectively became the regional manager, overseeing. I was spending 15, 20 hours a week on this
Oh,
opportunity. And it was chiller boiler problems that they had advised, roofs leaking that partners had advised not to do. We just heads down though. I was determined this wasn't going to kill us. So I took a very active role. I kind of said, I'm going to do this. My other partners didn't have as much time as I did. All that come through. I say I cut my teeth. Lessons learned was I cut my teeth on property management,
mm.
and that no matter what business you're in, it's operations that make or break the business.
Yep. Yep. For sure.
Doesn't matter whether multifamily, storage, computers, anything. But the good news is we sold it 21 months later and doubled the investors' money.
There you go.
So it had a positive ending, but I got a lot more gray hair in that time period.
Well, and it's a good lesson to not buy chiller boilers. I actually have no idea what that is. What is a chiller boiler?
That's a great question. So if your audience is listening, a chiller boiler system is when you normally think of an apartment building that has this, every unit has a different air conditioning and heating unit. So they're modern with a condenser on the outside and something on the furnace inside the unit. Chiller boiler system is actually a very effective way to heat a building. That's why all your commercial buildings are heated today still and air conditioned today. It's just that it's a giant cooler, water specifically, that you drains over, and you're blowing cold air over it to chill the water, and then that water is piped through each of the units,
Oh,
and there's a fan in there with a blower over the things to create cool air for the unit, and
oh.
then it's reversed in the winter for heating. So the
So
plus
that's a
of
lot
it,
more
it's
piping and a lot more opportunities for leaks.
you're a wise man, Gabe. And the other big problem with it's very efficient. That's why your commercial buildings are done that way today. But the problem is that goes down. You've got 139 people without air conditioning in the
Oh,
middle of
right.
summer
Because
in
it's one
Texas,
system. Yikes.
or it goes down in the middle of the winter. You don't have any heat in Texas, and so there was a couple times we were sweating. And the problem with this one is it was an ancient system. Couldn't find anybody to work on it. Is
Mm,
a nightmare.
yeah. All right. Well, note to self, do not buy chiller boiler.
And there are some locales I've learned from that too. My first LP investment was in a city called Port Arthur, Texas, which was right on the coast. if any of your listening audience ever has an opportunity to buy in Port Arthur, Texas, turn the other way and run.
They're all chiller boilers.
No, just I'm sorry. Anybody that lives in Port Arthur, if they're actually listening, that's not too much of a slam. Other than just say it's just a very blue collar neighborhood. It sits right on the ocean. We got destroyed by Hurricane Harvey,
Mm.
and so it sits right on the ocean. Lessons learned. I wouldn't do that again either.
Yeah, I can't tell you how many times we've gone into the importance of knowing the area you're buying, especially like the exact corner that you're buying on. Because if you're not from the area, you might be buying on a corner that's just rampant with property crime or whatever, and you wouldn't know otherwise because it's a great city. So you just got to
Yeah.
really know those specific locations. All right, that leads us to the very last question. This one's for the listeners. You've given us a lot to think about. I'm sure people want to reach out. I know you do coaching, so tell us a little bit about the coaching program, what they can expect, and then how they can find you.
Well, thanks, Gabe, for letting me on today. And so I want to offer anybody that's listening, if they're interested in coaching, mentoring, connect me offline. I'll make you a great deal on a trial basis for only $197 a month, $197 for 3 months, because we're trying to build this business. And what we're trying to do is differentiate it from the big boxes. And I'm not disparaging the big box, what I would call the Jake and Geno's, the Sumrocks organizations, but they're a whole lot more. And we're trying to create much more what I'd say the true value hardware approach, where it's more personalized approach, working with people. You get me and my partner. So I'd love to talk to anybody about that. The easiest way to connect with me is I have basically 2 web pages. My InvestArk is invest-ark.com. There's a contact me there. And there's on the educational arm is called multifamilymaestros.com. Multifamily Maestros, all one word.com. And there's a discovery call there. Would love to chat with anybody that wants to talk as well about anything. It doesn't have to talk about, and I should say anything real estate wise. I'm not going to give
Perfect.
personal advice.
So that is, if you guys are interested in the coaching, it's Multifamily Maestros. I'm assuming Maestros is spelled Maestros, correct?
That is correct.
All
Traditional
right,
spelling, all one word.
there you go. All
Multifamily
right.
Maestros.
I will put that link in the show notes. So if y'all want to reach out, just click the little more in the description. It'll pull down that full description, and in there you can find Randy's link. All right, man. That wraps it up. Thank you very much for hopping on the show.
Gabe, I really appreciate it today. You have a great weekend.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, have a great weekend. Keep rocking real estate, and I look forward to seeing you on the next episode.